Yeah, we've seen some unexpectedly good news, above expectations good news for the Treasury because of a slightly above expectations decrease in the rate of inflation. This is CPI inflation over the last few years. We can see the mountain here of more than 11% in 2022 inflation. Peaked out, it's been declining. There's the Bank of England's target rate of 2%. Dipped below it briefly in September. We are now down today to 2.5%. Expectation was 2.6%, so that's better than expected news, always a pleasant surprise. But I think there's even more encouraging news within the context of the challenges the Chancellor is facing in the underlying numbers. So let's have a look at those. Don't panic, 4 lines. The red one remains, core CPI, that's what we're looking at just now. But look at the underlying figures, ones that the Bank of England particularly looks at. Core CPI inflation. If you take out volatile things like fuel prices, what are we left with? That's down to 3.2%, down from 3.5%, bigger than expected decline. And services inflation. 80% of the economy is driven by services. It's down 0.6% to 4.4%. Again, much more, actually, in that case, than economists were expecting. Goods inflation on the rise a little, but all of this has contributed to the fall in CPI. And the significance of services and core inflation particularly is those are the things the Bank of England has been talking about being their worry. As inflation fell from those highs, the question was, how sticky would it be? How much of the residue of high inflation driven by energy prices and food inflation, all of which has its roots in the Ukraine war, how much would be left in the domestic economy? Until they see those falling, they're reluctant to cut rates. Well, they're seeing some signs there they'll fall. And that means expectations in the markets are now that when the bank meets in February to make its next decision on interest rates, it's gone from, it was about a 60% chance markets thought before these numbers were published. That's up above 80% now. So our expectations, we could see a 1/4 point rate cut next month, which will be positive news for everybody. Let's have a quick look at how the UK compares internationally. There's our 2.5% rate. It is higher than our peers, certainly higher than France, a little bit below Germany, on a par with the EU, and the US on the end there, 2.3% inflation. Now, that number will change today. The US will announce its inflation numbers. They are expected to increase. And that's historic numbers for what's been before. What is coming is President Trump from Monday. He's inaugurated. He'll be in a position to start enacting policies, including tariffs and impacting trade, which most people think will be inflationary. So that number could rise. And whatever's happening in the UK, the cost of borrowing, which you've talked about a lot about in the last week, which has increased in the UK, well, that has been driven largely by market concerns, expectations about what Donald Trump means for global inflation. There are some specific UK factors we've talked about. There's some doubts about the Chancellor's budget, whether it will actually depress growth by hammering businesses with taxes. She won't be able to deliver on the twin aims of rebuilding public services and financial stability, economic stability, while delivering growth. But the main mover here is still the US. So we'll be watching at the Treasury how those numbers play out and how the markets respond as the day goes on.